there's no need for me to name them. Mature industries are having to deal with major challenges. On the local scene, this is the last year of this government, and also we have a recommendation by the International Monetary Fund, which came out in March of this year, where they said that public debt should be placed on a downward trend. These, to my mind, are the sort of background to the budget. And as you can see, there are two opposite forces there. On the economic side, the various problems, international, local, which means the budget had to tackle these economic difficulties and improve public finances. And on the other side, with the looming general elections, big temptation to be generous on the social front. As we go along, we shall see how those two opposite goals have been tackled, if at all. So let's go to the size of the budget for 2019-2020. Let's just remember that the size of the economy of Mauritius, the so-called gross domestic product, is estimated to reach in the financial year 1920, July 19, June 20, 552.6 billion, meaning a growth rate, according to the official figures of the budget, 4.3 for that 6 months in 2019, 6 months 2020. But the CSO figures published a few weeks before indicate that for 2019 the growth rate is going to be 3.9. They did not give figures for 2020. Anyway, so the GDP at 552.6 billion rupees, inflation 3.5%, investment rate 18.9% of GDP. On the other side, as I was just telling you earlier on, with these problems on our export markets, together with a lot of imports caused by the large projects which are being carried out, there is an important figure which we have to bear in mind, that we are in a situation of negative, of net exports of goods and services being negative. Net exports of goods and services, that is, imports larger than exports. And if you express this as a percentage of GDP for the year 2018, this is official CSO statistics. The negative imports minus exports is equal to 13.5% of GDP, and for 2019, 15%. We go back now to the size of the budget. The recurrent revenue is estimated at 104.7 billion rupees, and recurrent expenditure 121.6. You can calculate the difference. And then capital revenue is 6.3 and capital expenditure 17. Overall, the budget deficit will be equal to, according to what I read in the budget, in some schedule, 3.0%. But when I look at this detailed calculations are given you, I think it's 3.2%, and the minister did say 3.2% deficit, just like in the previous year, which means that public debt will go up because you are to finance the deficit. So you are not on a downward trend, but you continue to be on an upward trend. Public debt is estimated at the end of June 20, at the end of next year. Public debt is estimated as at being 62.8%. 62.8%, and in 2021, 60.0%. Therefore the basic figures I wanted to share with you. But I continue with public debt, and it is estimated, projected rather, in the budget figures that in June 21, 2 years from now, the debt will go down to 59.8, and in June 22 to 59.3. You will bear in mind that the National Assembly some years ago voted that the budget deficit, that the GDP, public debt, should not exceed 60%, 60, by June 21. So on this basis of these projections, we shall be respecting what the National Assembly voted. I'll come back to that just in a moment. One good thing about public debt in Mauritius, fortunately, is that it is largely long-term. 2/3 is long-term, so it gives you more time to breathe. And it is external only to the extent of 15%, 1/5, so that at least you don't have to dig too much into your foreign exchange reserves when you service your debt. Talking now of this quicker refund of a public debt, may I quote paragraph 4 to 9 of the minister's speech. I quote, "Early repayment of public sector debt by using part of the accumulated undistributed surplus at the Bank of Mauritius." And to that effect, in the appendix to the budget speech, by the way, it's quite interesting to read at this appendix. It's full of information about a lot of legislative changes. In that annex, it is said that the Bank of Mauritius legislation will be modified. I quote, "to allow use of funds from the Special Reserve Fund for fiscal policy purposes as well." In other words, we are seeing a sort of coming together of the fiscal situation, situation with monetary situation. Since about, from my recollection, since about the end of the 20th century, I do remember when the Labour Party came to power in England, and somehow they had some very good idea. They insisted Bank of England separate from the rest. Bank of England not to be under the rule of politicians. I'm sure some of you will remember that. And since then, it has been the practice in the so-called developed world that monetary policy and fiscal policy are kept separate. Fiscal policy, that's for Ministry of Finance, government. Monetary policy is for the bank, the central bank. New Zealand did follow that in that step, and I suppose, although I don't pretend I can assure you it, I suppose that the IMF have adopted also, this is best practice, separation of the two policies. As it is, you will agree with me, there seems to be some change to that separation. We'll see how it goes, but since the surplus, some surplus apparently, which is in the balance sheet of the Bank of Mauritius, is the result of profits which in the past had not been distributed. It is true to say that under the Bank of Mauritius Ordinance 1964, I think, that's a long time ago, it was provided that the Bank of Mauritius would pay dividends every year to the consolidated fund. And this has happened throughout the years. So in a way, when the minister says any surplus is due to me, he is probably legally right. I'm just interpreting. But as I say, that goes back to 1964 also. Now there have been changes in ways of treating these matters, and we are in a situation today where one is much at ease to see a real separation between the two policies, on top of which we have to remember that the Bank of Mauritius has been, over the last 2 years, incurring losses. There is nothing wrong with a bank, with a central bank incurring losses. Their job is to protect the value of the exchange rate, value of a rupee. And they did make losses because they were trying to skim all the liquidity which is in the banks. But which means they need liquidity themselves. They need the force to be able to carry out their work. If now they are going to be deprived of some of that, I am not sure that this is the right way of doing things. So this, I was talking about the budget, therefore, and the public debt. Perhaps I should now look at some of the social aspects. Of course, as you know, all budgets have their share of monies for the welfare state, which is part of our setup in Mauritius. And if I just look at these four main votes: education, health, social security, housing and lands, the amount due to be voted is equal to 59.5 billion. 59.5 billion rupees, as opposed to last year, 55.6. In terms of percentages, in this budget, these four main votes represent 1/3 of expenditure. Last year, it represented 36.9. So, still on the social side, there are some goodies. One is, I think, was really due, is important, is the portable gratuity fund, which I think is fair, so that everybody can at least, whether even if they change jobs, benefit from at least a pension or gratuity, as we say here. I also rather like the idea of a skills development authority. This is for training, for education. You all know that it is terribly important that we get our people skills, not just the noble professions, including ours, but we need skills also, and it's terribly important if these proposals are carried out. And they have also asked that providing for an education hub at Côte d'Or, where we still have to see what will be in that education hub. You will remember that CSR has been almost totally not privatized, le contraire privatized. No. Has been nationalized. CSR has almost totally been nationalized, and you know there is a national CSR foundation, or whatever it's called, and the minister has announced that he's going to give them a new charter so that they can work on a program for poverty alleviation. Nothing wrong with that, as long as the job is done properly. But something which is rather interesting to note, that they are going to have now two types of NGOs. There will be the community-based NGO and the so-called NGO d'utilité publique. My guess is, after what we have heard recently of all the abuses in homes for children and for old people, my guess is that these NGOs will become utilité publique and probably will be submitted to greater control, which would be, of course, a good thing. Some points which I wanted, one or two points which I wanted to draw your attention to, which I think are good steps. Good steps. You will remember that every year we have the audit report, and a lot of talk, a lot of discussions, and nothing happens. I remember writing about this recently. I said, why don't you do like the private sector? Have audit committees. Have also internal control. I was very pleased to hear, to read, that two committees are going to be set up. One at the Ministry of Justice. Does he intend to take action against those who act improperly? I don't know. But one doesn't interest me. The other one is a committee, a steering committee at MOFED, Ministry of Finance, to review the structure, composition, and functioning of audit committees and internal control. So let's hope this is not just a paragraph in the budget speech, and that it is put into practice, and that action is taken when necessary. Two or three more good points which I wish to draw attention to. At long last, hoping it will happen, they will return to the private sector, to private sector finance for certain projects and for the disposal of certain strategic assets. Two things. We remember, I don't know if it is 5-10 years ago, we had even a law on private sector financing of government projects. There was a law. Of course, you need a legislation. This has been allowed to just fall by the wayside. Now they are saying they are coming back. It's a bit late in a way. I mean, because we have seen the metro itself could have perhaps had some of that. But anyway, so coming back to that idea is good. Disposal of certain strategic assets. This leaves a question mark. What is it going to be? What are these strategic assets? I prefer not to mention any coming to my mind. And then, a good point, a new expenditure framework. Budget money for overseas missions goes down from 160 to 120 million. A very good one. The country is going to be cleaned. That's a good one. The country is going to be cleaned, and they call it a national campaign of cleanliness and embellishment. Very good idea. And I did hear the minister talk of local authorities, and I think he was right, because local authorities have their job to do in that. And I won't quote any city, any town, just look around and you will see that it is right to do that, provided it's done. Because tourists, I think, our tourism is going to suffer from that sort of thing if we carry on doing so. Just by the way, if I can give you one figure on tourism, over the last 10 years, 2008, 2018, over the last 10 years, the number of tourists in Mauritius has gone up by 50.4%, 50.4. In the Maldives, and you know Maldives is not so politically easy, it's gone up by 117.3%. In the Seychelles, our dear neighbor, 127.6%. Sri Lanka, with all their problems, 432%. Now, maybe Sri Lanka is not to be compared, maybe it started from very low. But at least with Maldives and Seychelles, we are falling behind. So this is a terribly important statistic to my mind, and I hope that the cleaning of the country will go some way, not all the way, some way to improve our tourist figures. Mention was made of a modernization of manufacturing industry with the help of Americans, I think. I hope we get all this digitalization and things like that, new robots, etc. There was not much talk of it, but it seemed in the background of a speech. Finally, perhaps, not exactly finally, but what everybody was expecting or fearing was pensions. Pensions, old age pensions, was the thing we have been told to the minimum wage level, which would have been a catastrophe, because long term it would have caused a terrible problem with an population which is growing older and older. So I would like here, so 500 rupees I think is okay, that's more sustainable, but I think no government, whether this one or another one, will ever be able to solve that problem of targeting. This is very, very difficult. So I've just been thinking about this. Perhaps an indirect way would be, you know, there are pensioners who pay tax on the pension they receive. So they receive a pension. Maybe they should be encouraged to pay that pension over, to make a donation to an NGO, utilité publique ou pas, to an NGO, make a donation up to the amount of their pension, or more if they wish, and have this deducted from their tax, so that it would neutralize the tax they are expected to pay on the pension. At the same time, it would help these NGOs, and perhaps, hopefully, these NGOs would be a bit less of a burden on the social welfare budget of government. Everybody would be a winner, it seems to me, and that would get around this very difficult problem of targeting. Finally, what I call the lost opportunities. There are two. On the demographic side, no strategy again. We are just told that there is some help for women who work in the public service when they are babies. But we need more than that. We need maternal leave, paternal leave. We need perhaps, we have silver bonds for the old. What about baby bonds? So we need the crèche at work. This is what we need for demography. But nothing. And the other missed opportunity is the use of our maritime space. 2.3 million square kilometers. We are told there will be something about bunkering facilities. Very good. But what about skills program for fishermen? What about the acquisition of modern fishing boats? What about studying? I don't know if it would happen, but at least studying to what extent we can get energy from the sea and things like that. Of course, we need competencies, foreign competencies, obviously. We need money, but if government takes the lead, it has so many friends around the world, friendly countries, which have AMFIC, or even the places like institutions like World Bank, to be able to really put our maritime space to use. Otherwise, do you really think that this country is going to continue growing when it has people who are getting older and when it has a maritime space which is not used as it should be? This is a question with which I leave you. Thank you very much.
When you look at the budget speech, when you're talking about this budget deficit and the borrowings, it comes into the last paragraph of the budget speech. So you have two paragraphs which talks about the debt, and then it goes automatically on increase to the public servants, which gives them a 1,000 rupees increase on 1st of January. So all the public servants, you should be happy by now. So all these are good news. So on my side, from a tax angle, so I would just sort of brush a little bit, like I was saying earlier on, we have not got any change in tax rate. The tax rate remains 15%. But what has happened in the budget is it has sort of corrected certain issues which cropped up last year in the Income Tax Act. So you would recall that the first thing that was changed last year was Section 73A, which was introduced in terms of bringing what is known as effective management. So when you read the budget speech, it says that the income tax will be amended to implement the recommendation of industry stakeholders regarding determination of tax residency. So what does that mean is that the industry stakeholders were very averse to the introduction of place of effective management. And we have been very vocal about it with the Ministry of Finance, with the Financial Services Commission, to say that we cannot introduce a new concept without it being tried and tested. So I think to address that issue, now the budget speech and the annexure, like what we were saying, says that they would address that issue under the Section 73. So you would not have effective management. We will still remain with the concept of control and management. So I think that is very laudable. At least we have a listening Ministry of Finance which takes consideration of our representation. So this is one which has been addressed, and also it makes mention that consequential amendments to be made under Section 71A of the Financial Services Act. So this is basically 71A talks about authorized company, but in 71A talks about effective management to be outside Mauritius. So I would think that what they will do is they would amend effective management to bring that the control and management would be outside Mauritius as set out in the paragraph. So I presume that authorized company would remain as a essential vehicle in terms of structuring when you are looking at tax structures. Other changes which are sort of positive nature is you would recall that the Prime Minister mentioned that the OECD has cleared the partial exemption regime and deemed not to be harmful. So this is something that we worked quite a lot together with the stakeholders to ensure that we get that status. But recall that we still have a hurdle which we have to jump, is the EU. So the EU itself has deemed that the partial exemption regime is harmful unless we address it. So this is where the proposal in the budget speech says that we are going to amend the partial exemption regime. So what is proposed is there would be a more detailed substance requirement that that the taxpayer has to meet in order to enjoy the partial exemption. So currently what we have is it is set out in the Financial Services Act, but now it will be within the income tax regulation that they will put the conditions to benefit from the partial exemption. The other requirement that the EU, which we have requested the government in terms of outsourcing services. So basically, management companies tends to provide services to the client, and one of the requirements of substance is to have people who will be working on the structure as well as having an office. This is the sort of the physical substance when one talks about it. What we have agreed with government is basically you have a structural issue, because how would you get so much office? How would you get so much people? So this is where we made representation in terms of having the outsourcing capabilities that the core income generating activities are carried out from Mauritius. But the concern of the EU is how you monitor the outsourcing. How should you be outsourcing outside Mauritius? And whether the services are being done time and time again by the same people. So this is where the budget speech, the annexure to the budget speech comes and clarify that issue. It's put on us that there would be adequate monitoring of outsourced services, as well as all outsourced services must be conducted in Mauritius. You cannot have outsourced services outside Mauritius. So there would need to be some clever structuring around fund management services when we come to that, as well as how you monitor that and ensure that there is no multiple times of use of resources. I think this is basically the use of timesheets would be of essence when, let's say, you are being sort of monitored by the Financial Services Commission to demonstrate that the activities is actually carried out from Mauritius. So you would have to provide your timesheets as to which level of staff has been used to provide the service, and these services have been carried out from Mauritius. So I think the monitoring side of things would be done by the Financial Services Commission, and this is where you have that provision that consequential amendments will be made to Section 71 of the Financial Services Act whereby it would allow for this. So one concern of the EU has been in terms of the substance, but they also sort of express concern around the lack of anti-avoidance provision. So as you know, in our Income Tax Act, we have a very broad section 90, which covers anti-avoidance. But our understanding is the EU is not happy with the anti-avoidance provision that we have, and they have requested that we introduce the controlled foreign company legislation to circumvent that issue. So as a service provider, we don't see, and we have discussed with government as well, we don't see any issue in the government introducing the controlled foreign company rules. Basically, what it does is it sort of appropriate the profits of the underlying subsidiary and tax it, for example, in Mauritius. But there are certain exemptions which is available. Let's say if you're carrying out an active business in the subsidiary, then CFC rule will not apply. So technically, even though you are going to introduce CFC, being that you have a subsidiary which is carrying out active business, you will never sort of have the application of CFC in Mauritius. So this is why we agreed with government. They want CFC, let them have it. So, and the government is going to legislate for that, and this will come through. Something which I think needed a clarification. I think the MRA is being very strong about it in terms of arm's length transaction. As you know, we have one section in the Act, which is section 75 of the Income Tax Act, which looks at arm's length transaction. But it is very restrictive, because in most transactions you would sort of look at the OECD model in terms of transfer pricing to determine the arm's length transaction. So I think this is a welcome for me as a person who does structuring. It would be a welcome move that we get more clarity around the arm's length transaction, so that we can sort of know how we are going to structure transactions. Other changes which has been proposed, and I think this is also welcome, good news again. So you would recall the partial exemption regime was introduced last year, whereby it exempts 80% of the income. So, but this was applicable on only 5 streams of income, namely you have dividend income, foreign dividend income, interest, you have income from collective investment scheme, ships and aircraft leasing, and foreign permanent establishment. We made strong representation to the government to open a little bit of the partial exemption. We wished you had services, but they would not allow so. So what they have allowed is they have allowed leasing and the provision of international fiber capability. They have also allowed for reinsurance and reinsurance broking. So there is quite a lot of this activity which is being carried out in Mauritius, and these people were so happy to see that. I have one client for leasing which was sort of doing rolling stock leasing in Africa, and when they saw that leasing was now open for partial exemption, they said, "Thank you, Mr. Anlas." The other one, I think, I don't know where that comes from, but I think there is a big affinity from the either the Ministry of Finance or the MRA in terms of aircrafts, because in the initial one you had ship and aircraft leasing, but now they have brought in the sale, financing arrangement and asset management of aircraft and its spare parts, including aviation related advisory services. I don't know where there is such a engouement to have aviation, but there it is. I think we should all be engaged in aviation services nowadays. Another change which is sort of has come is the accelerated depreciation. As you know, if you are spending less than 30,000, you can claim the whole amount as deduction if it is on plant and machinery. So now the threshold has moved to 60,000 rupees. So I think it makes life much easier because cost of living is going up and up day by day. So it was high time to address that issue. Another point which is of interest is the carry forward of unrelieved tax losses. You would know that when you have a situation of change in ownership, what happens is, unless you are a manufacturing company, when there is a change in ownership, all your tax losses is lost. So what has been proposed is that now they are going to extend this by putting that any company facing financial difficulty. So this is where it becomes very challenging. How do you determine financial difficulty so that you can benefit for the loss to be carried forward? I know in the UK you have that issue that your trade becomes negligible, but we will have to wait what comes out to determine what would be deemed to be in financial difficulty, so that you can carry forward the losses when there is a change in shareholding. The other one is the simplified tax calculation. This is something which is very interesting. I saw that in the budget speech. So it gives you a sort of a choice. So if you're a small business, if you want to be calculated, your tax to be computed on turnover, you can take a 1% of your turnover and compute your tax. Or you can do it the normal way. You take your income less your expenses, you get your chargeable income, but then you will be taxed at the normal rate, which is 15%. So this is an interesting measure. I would think that it is welcome for small entities. But I think it is questionable in terms of if you are engaged in international trading. In terms of when you're doing international trading, you know that your profit is taxed at the rate of 3%. So what do? So you would have your income less your expenses, and the net would be taxed at 3%. This can give you a lower effective rate than the 1% that they are mentioning here. The other thing that is not clear with this measure is the application of CSR. So whether you still have to pay 1% of your turnover plus 2% of CSR on what? So it makes life a bit more complicated. We will have to see the regulation when it comes out. But I think they won't let go on the CSR. They would want to get their money on CSR. We will see how it comes out. Pierre mentioned about this corporate social responsibility. So there will be a new NCSR foundation that will be created. So I will not dwell too much on that. Other welcome measures is tax holidays. We love holidays in Mauritius. So there are 3 measures that have been brought in. One is the innovative box regime. Not pleasant name, but still, I like the word innovative, but the box one is a bit of a tricky one. So if you are involved in that activity, then you will benefit from a tax holiday of 8 years, derived from intellectual property assets developed in Mauritius. This is very important. It has to be developed in Mauritius. You cannot acquire it outside and then bring it to Mauritius. They will not let you. You won't get. I presume that they won't give you the benefit of the tax holiday. So, if you have an existing company, you can still benefit from this tax holiday, provided that you have done the needful post 10th of June 2019. Of course, the BEPS Action Point 5 haunts us all the way. This is what requires that you have to have the development of the intellectual property within the jurisdiction. The other tax holiday that has been provided is the e-commerce platform. So here they have become a bit tight. Over there it was 8 years, now they've come to 5 years. 5-year tax holiday will be introduced for the setting up of an e-commerce platform, provided it is incorporated before 30th June 2025. So don't wait until 29th June 2025 to set it up. You can do it now itself. Last one in terms of tax holiday is the peer-to-peer lending. So this is one interesting one, because when they said peer-to-peer lending, I said, what is that? So I had to Google, as usual. If you don't know something, you just have to Google. So this is where I've learned what peer-to-peer is. Basically, this is what it gives. You have lenders and you have borrowers, but they use a platform to do the lending. So if you are going to operate that platform, then you are going to get a tax holiday of 5 years. But the interesting thing is, I don't know, I don't have the answer, is are we actually circumventing the role of the Bank of Mauritius? So if you're going to take deposit from people and then lending, so it's collecting deposits and then giving loans. Should we not have a banking license for that? So I don't have the answer. We will have to see how it pans out in terms of the regulation. Other measures in terms of amendments. So the free port. As you know, Freeport was previously exempt from tax, but last year in the budget it was announced that there would be a tax rate of 3% on Freeport. But then very often you would have Freeport operators who would be selling on the domestic market. So if you were to sell on the domestic market, the profit would be taxed at 15%. And your activity within the Freeport was 3%. And this would have constitute harmful tax practices. And this is where the proposed amendment is to sort of make both of them tax at 3%. But this is a good opportunity for tax planning. So why should I set up a domestic company whereby my profits will be taxed at 15%? I'll set up in the Freeport. And then I sell on the domestic market, I'll be taxed at 3%. So I don't know whether there would be certain regulation that will come and block the amount that you can sell on the domestic market. We will have to see how it pans out. I don't mind paying the Freeport operators some rent to operate in the Freeport zone, and then just sell on the domestic market. We'll see how it goes. The other thing that has been mentioned in terms of Freeport, it doesn't come, as Mario would say, it doesn't come like a freebie, like I'm just saying. You would have to ensure that there is substance in the structure. So the paper thing that we think we can do, we just buy from China, put it in the Freeport, and then sell to the domestic market. I don't think that would work. You would have to put substantive business activities in there. So you would have to employ a minimum 5 employees, and you incur at least a minimum expenditure of 3.5 million rupees. So this would be audited by the MRA. You need to ensure that you are actually incurring that expenditure and you're employing that. Then only you would get the benefit of the 3% tax rate. The other thing that is of, I think, important to rectify again is on the CSR. So as you know, if you operate in the free port, you don't pay CSR. But if you are going to sell on the domestic market, then you would have to pay CSR on that amount of profit. So potentially what you're looking at is a tax leakage of about 5%. So I think this takes care of the corporate side, but like one would say, we like to know what is in it for me as an individual taxpayer. So Minister announced that there would be an increase in the threshold. So the threshold now will stand at, it says that it will increase from 5,000 to 45,000, but I don't know why when you have one dependent, it does not give you a proportional increase in your threshold. It just gives you a 5,000 increase in your threshold. So this, my mind still boggles how that has been done. But it is in the budget speech and the annexure, so this is how it is. The other thing that comes is, I remember Salim last budget speech asked me that question, and I didn't have much of an answer for him, is in terms of the 10% taxation for the middle income earners. As you would recall, if you earn 650,000, less than 650,000, then you are taxed at a flat 10% rate. But Salim said, what about if I have to give that guy a small compensation? Then he would go above the 650,000, which will mean that his whole income now will be taxed at 15%. So luckily Mario was in the audience last time as well. He listened well, and he has made the needful in terms of addressing that issue. So it gives you a leeway. So your salary would be 50,000 times 13 would be 650,000. But if you were to give a small compensation accordingly, provided that everything does not go more than 700,000 rupees, you will still be taxed at 10%. So I've just done a small computation in terms of, let's say the guy was getting 50,000, but in terms of his performance, he gets a bonus in the last year. So what it provides for is, it will be taxed at 15%, but you get a credit for the additional tax you pay when you submit your return, just to bring you back to your 10%. So this is how I work it. I don't know whether it is right, but this is how I make sure that the taxpayer doesn't suffer. So this was more in terms of the 10% rate. And then you have other measures which was announced for the individuals, is in terms of the peer-to-peer lending. So it would be an individual putting his money, but he will get interest income that comes in, and that interest income will be taxed at a flat 3%. Wonderful. So I think this is welcome. And it also allows that any bad debt, because it is a very high risk in terms of giving your money away to an operator. So any bad debts or fees that is payable is deductible before you compute your tax on that income. And the other welcome thing is they do not provide for TDS on that interest income. So that is useful as well. Another measure that has been introduced is basically reducing water runoff from rooftops. I think this was introduced last year. If you were to invest in the gutter system, then you could have got that as deduction. But here you can have soft loans of up to 50,000 rupees from the DBM at a rate of 3%. So buy your gutters, spend the money, you get your deduction from your chargeable income, and then you also have the benefit of getting a concessional interest rate of 3%. So I think this is very useful. So to do, we call that rain harvesting. Other measures that we have seen in the budget, yes, just in terms of the increase in the income exemption threshold. So I've just done a small computation. So you would see with the increase in the income exemption threshold, you would be better off with the budgetary measures. This is interesting in terms of, I don't know, the Prime Minister likes kids or what. So if you have dependent children pursuing tertiary education, so he has increased the limit from 3 to 4. So you can have up to 4 people that is studying and you still claim the deduction. But the catching thing is, if you, not me, if you earn more than 4 million rupees, you would not be allowed to get the deduction. So don't get excited about it. You have to watch your income. You also have relief for medical. This as well, they have allowed for an additional person to be claimed. So you can get a 10,000, because previously it was for 3 dependents, but now it moves to 4 dependents. This is something that just came out of the blue in the budget, is SIC development company will be exempted from income tax. So I don't know why, but this is what is called a retrospective application of the law, and it goes back to 14th of December 2017. We always know that we will get tax next year, but this one goes back. So it's all creative. And it's SIC. But I won't gamble into who is benefiting. In terms of value-added tax, this is a welcome clarity that the MRA has given to us, because a lot of people didn't understand whether these supplies would be zero-rated, but now it is clear that if you're going to supply, a local company is going to supply to a foreign company who is outside Mauritius, then the rate of VAT would be 0. So provided you don't bring the goods back again, so you enjoy from a 0% VAT rate. A lot of people have been trying to be clever by splitting businesses into different segments, different entities. So here there would be a clampdown to avoid registration. So MRA would look at the various businesses together to ensure that all these businesses becomes VAT registered. So they put it as you are compulsorily required to register for VAT. So the other point which is mentioned under VAT is VAT invoice is issued to a non-VAT person. His name, business address and business registration number will have to be stated. So before, when you were doing it to a non-VAT person, it was simple, but now make sure that your client is aware that they would have to insert this on the invoice. Management of insurance schemes is exempt from VAT. I think this is given, because I don't know whether it is insurance. It should be exempt. I don't know why they have put that, maybe for clarity. Something which is very welcome is in terms of when you are doing acquisition of goodwill. So previously, when you were buying fixed asset, you would claim input VAT on your capital goods. But goodwill, there were no certainty, but now they have proposed that if you are going to acquire goodwill, as well as intangible assets, you can claim back the input VAT on that. So I would think this is, I think, very positive for me. The last point in terms of VAT is in terms of processing the VAT returns. So they say that all VAT registered will have to file the VAT return electronically as from 1st of March 2020. This will allow for a quick VAT refund. Let's hope so. Yes, in terms of tax administration, so this is something which is for you when you're representing your client. So it says that an agreed taxpayer will be given sufficient time. Sufficient time by law is 28 days. To file his statement of case and other relevant documents to the ARC. Furthermore, if the chairperson or vice chairperson of the ARC is satisfied that failure to submit the required statement of case or other document is due to reasonable cause, then the ARC will have to listen to your case. So it just mentioned statement of case. I would recommend that you need to file the ARC representation form within your 28 days, and then the others may follow if you have reasonable ground to do so. But if you can do it within the 28 days, send everything so that you make sure that your case is heard at the right time. Other measures which has been mentioned is admissibility of documents produced by computer. So I think in the era of IT, I think this is welcome. This is something, dispute resolution. So if you are going to go for, I'm not very clear what does that 150% case filing fee means. Is it, we don't have much to pay to the MRO when we are doing that arbitration, but I presume that it might be, I'm a bit lost, maybe later Mario can tell us what it means, but it is a bit of a mystery to me. Other changes is the foreign assets. This is an interesting one. So for those who have assets outside Mauritius and who have not declared it, and it comes in terms of income, so you have that possibility of voluntarily disclosing these assets, and you have to pay your tax, but you would be exempted from penalty and interest. So this is a welcome one for those who have assets abroad, and you want to sort of clean everything. This is your time to do it, and you have to do it before 31st of March 2020. The other one is the expediting dispute resolution. Voluntary disclosure for SMEs. Yeah, so for SMEs, if you are going to disclose, you would be, if you have undeclared income or underdeclared income, then there would be, you would be free from penalties and interest. I think this is for all those practitioners who have clients who have this situation. I think it is good time to regularize these issues. And then the last one is the arrears payment scheme, whereby if you have some money due, the MRA will not charge you any interest or penalties. Okay. So this is covered. Am I in time, or is there, can I spend more time? Because this is basically the measures with regard to the financial services. Chairman mentioned most of these measures earlier on. I don't think I will take more time. I will give each other the. Okay, thank you.
And ACCA Mauritius for giving me the opportunity to address such a distinguished crowd of accountants, and therefore to comment on the budget speech from the perspective of its impact on enterprises and investment. As both speakers before me have mentioned, the measures are not only contained in what we heard yesterday, but also, and importantly, for the measures that affect the productive sectors in the annex to the budget speech. So the annex is an integral part, gives us a lot of insight into those measures. But there's a third document that will come up in a couple of weeks' time, which is the finance bill. And again, this is an important document that we need to look at very closely, because that's where it becomes law. And therefore, we need to look at that when it does come out. What Gary also mentioned are regulations. Regulations will come out as well around the same time as the finance bill, or subsequently to the finance bill, and we will need to pay very close attention to that as well. For the moment, what I would like to say is, how do we see the measures affecting investment and the productive sectors as they will affect enterprises? But before doing that, I would like to say that there are a number of measures there which are quite interesting, but there's a number of measures that we feel are missing. And here, what Pierre mentioned as the lost opportunities, and I will try to look into that as well. To start off, we see a review of the economy, where what is actually put to the population, to the nation, are just all the positive macroeconomic indicators. GDP growth, with only one subcomponent of GDP, which is the construction industry, because obviously construction is doing extremely well at 9.5% in 2018 and 8.6% in 2019. What we don't see are the difficulties and the performance of those sectors who are under stress, like sugar, like manufacturing, like tourism. We don't have those figures. Thank you to Pierre for having given us some of those figures. Again, we see unemployment at 6.9% at its lowest. Inflation, obviously, at 2.3% for the period 2015 to 18, with a forecast of 1.5% for 2019. Total investment as a ratio of GDP at 20.5%, FDI as a record height of 70.5 billion, and balance of payment surpluses. There is mention of the trade and current account deficits, but no reason given, and how to address those. And the last positive macroeconomic indicator given to us in the budget speech is the international reserves at 241 billion, representing 11.2 months of import coverage. Those crucial economic indicators like the savings rate at 9.1%, I don't think we've had it as low as that, with a slight increase to 9.7% in 2019 this year, which is forecast. We've never had the savings rates below 10%, as far as I can recall. I don't know whether you have. And this is really something that we should really look into and address our mind to. The other indicator that I feel is missing is the private sector investment as a percentage of GDP. In 2018, 14.1%, 2019, 13.6%, and on a declining trend. What we always said was that we needed at least 25% of private investment as a percentage of GDP to be able to reach the rates of growth above 5% that we've always been craving for. And what to say about the public debt? I think Pierre has said enough. Moving from the current rate at nearly 65% to reach 60% in 2 years' time. Bank of Mauritius will come in and help. On the measures to boost investment, I note three measures on a very sort of high level. One is innovation-driven measures, and I think this is very important. We're going to have the Mauritius Research and Innovation Council. There's going to be a National Innovation Research Fund with a seed capital of 100 million rupees. But private sector is going to have to pitch in as well. We don't know to what extent and at what rate. And there's also going to be a special lotto draw for that. Second measure, which is very important, is on skills upgrade. Training and human resource development obviously is a very important factor, and linked to the innovation aspect is special courses in artificial intelligence. Mention of a post-study work visa to foreign students. I presume foreign students working in Mauritius who will be given the opportunity to stay on because they're so good that we need them to further this particular aspect of innovation. And international lectures as well. One interesting one being done between government and Business Mauritius is the National Skills Matching Platform. We've always been talking about the mismatch between demand and supply of skills, and I think this is a very welcome measure as well. And the third one is the new business facilitation bill that is proposed to amend some 26 pieces of legislation to reduce red tape and lengthy procedures. So these are what I have gathered to be the main measures on investment side. If we move on to the productive sectors, in terms of the sugar industry, we all know the concerns that have been voiced throughout the sugarcane industry. We still have to wait for the recommendations from the World Bank study to give us strategic policy options for making the sugarcane industry sustainable in the medium and long term. So let's wait for the study. On the non-sugarcane agricultural sector, we've touched on tea, honey, flowers, sheltered farming, bananas, tomatoes, livestock breeding. But there's such a range of new agricultural products like biofarming that could have been addressed as well. The manufacturing sector looks at trade promotion and marketing scheme for Europe and possibly US. And EDB is going to look at a new ecosystem for adapting to the international market. Again, these are measures that to me sounds very high level, without much substance, much meat to it in terms of how it's going to be done. Another measure is the ISP. You remember the investment support program jointly managed by SIC and Business Mauritius in terms of support. This is going to be turned into a company at some point. On the ocean economy, I join what Pierre has said. Again, here missed opportunities in terms of our exclusive economic zone, the maritime zone, energy prospecting. We talk about fisheries, seafood bunkering, but at a high level. On tourism, a substantial increase in the MTPA allocation for promotion. We've heard about, again, funds may be made available to redynamize the Shanghai and Kenya routes, new tourism brand, marinas, the MICE sector, and the Clean Mauritius campaign. So these are the ones that I feel have got mentioned in the budget speech, but could have been much better addressed in terms of the set of measures. We now come to two sectors where I feel emphasis has been put in the budget in terms of financial services and the SME sector. On financial services, you remember the blueprint had been released. There's been a special committee for the implementation of the blueprint, and three aspects that we see in this budget speech for financial services. The first one is continuing to adhere to best international practice and international standards in terms of transparency, exchange of information, combating money laundering, adhering to whatever the OECD and the EU says so that we're fully compliant. Second aspect is the reinforcement of our institutions in terms of their mandate, whether amendments to the Banking Act, amendments to the FSC Act, giving greater powers to the Ombudsperson for Financial Services, and the setting up of a Financial Crime Commission. So this is quite an important aspect which is within the remit of government to ensure that financial services continue to be well regulated and looked into. But above that, we have a plethora of new products, which I think is very important and therefore has come out. Real estate investment trust, an umbrella license for wealth management activities, including private banking. We had at one point that dichotomy between who regulates what between the Bank of Mauritius and FSC, and therefore now there's going to be much more coordination between the two regulators in terms of wealth management, which is one of the areas that the blueprint recommends as an important factor. Headquartering of e-commerce activities, promoting green finance, and this is an aspect that is quite important, and a new framework for fund administration and management, and this is what we really need to look at and see what it is, because this is our bread and butter in the financial services industry up to now. And a very interesting one as well is the promoting Mauritian licensed funds and management companies to operate in the Gujarat International Finance Tech City. And I think if we manage to do that, that would be quite a headway for Mauritius after the dismantling of the DTA with India. And I think if we manage to get that, that will be quite a big step forward. Again, FinTech hub and a new SME trading platform. In terms of the SME sector, what we see is that all existing schemes for SMEs will continue, whether it's the SME financing scheme, whether it's LEMS 1, LEMS 2 for leasing companies, whether it's the factoring schemes available, because they have proved to be quite helpful. And these, as you know, are operated under the ISP, which is going to be a company. I don't quite understand the necessity for doing that, but I'm sure we'll find out in due course. Another interesting one is that commercial banks are going to get a fiscal incentive if they lend to SMEs. This was mentioned in the annex. Again, there's for another sector as well, which is in terms of lending to Africa for the Africa strategy. All the incentives that were given by the ISP were basically for SMEs, defined as companies with turnover of less than 50 million. In the case of the micro-enterprises, less than 10 million. A new category now has been created, which is the mid-market enterprises with annual turnover between 50 and 250 million. And this is a segment that is being given a number of preferential financing schemes from commercial banks, from the SME Equity Fund, is going to benefit under LEMS 2, and there's going to be a line of credit for export factoring in Euro and USD. So what we're seeing is that while support is going to continue for the SME sector, you have a new category of mid-market enterprises, as they call, which is the MMEs, which are going to be supported as well. So presumably these are the enterprises with turnover that can foray into the export sector. On the Africa strategy, not much. There's going to be, we have our 3 special economic zones, Senegal, Cote d'Ivoire, and Ghana. There's going to be sort of projects in Mozambique for liquefied natural gas, Madagascar textiles, and Kenya industry and technology. And again, we see that fiscal incentive to banks at a reduced tax rate of 5% for lending to operators in African and Asian countries. The Mauritius Africa Fund, still very valid, will develop strategic partnerships with development financial institutions. As far as, if we look at these measures, we see them again addressing our traditional sectors. We see them looking at those productive sectors which we call now in our jargon our mature sectors. We don't see the new emerging sectors yet. And what over the years have been the case in the Mauritian development strategy ever since independence is that whenever we have a new sector of economic growth, whether it was the free port, whether it was the offshore sector, whether it was financial services, whether it was ICT, it was government-led. It started off by being a project that government drives and then picks up either in partnership with the private sector and therefore do it. And this budget doesn't give us much in terms of these productive sectors. What I would like now to look into is that three other measures that have picked up, which would impact enterprises and is worth mentioning. Again, the modalities have not yet been defined, it's been mentioned, and therefore we really need to have more information on how it's going to be operated, how it's going to be set up, and eventually who are going to be driving this. The medical insurance scheme for public sector employees. The second one is the new Workers' Rights Bill, which is the Portable Retirement Gratuity Fund, with a wage guarantee fund. Who's going to sort of, beef up that fund? Who's going to contribute to that fund? Is it going to be enterprises? So basically, private sector enterprises would need to contribute. And another one I've picked up, which is the review of the priority of claims in case of insolvency, so that workers are not penalized. And again, a sore point for banks to address. And finally, I would like to comment on one measure, which is, very dear to me, which is the one on gender equality. What we see is the budget speech mentioning that there should be at least one woman director on the boards of public companies and statutory bodies. In the budget of 2016-17, this was already announced for listed companies, and it never became a reality because the listing rules of the SEM were never amended, the Companies Act were never amended, and therefore there was no enforcement. It was left au bon vouloir des compagnies to appoint women directors. But this time we hear that the Companies Act will be amended and the Statutory Bodies Act will be amended to ensure that there's at least one woman on the board of companies. What about the private sector? I leave you with this, and thank you very much.
Normally from the ACCA Panel Network, and it's time for questions now from the audience. Who wants to start?
Thank you for your presentations. I would like to add something that is missing in the budget of our dear Minister of Finance and Prime Minister. Is that we began as an agricultural country, all right? But we are not foresighted to see how to improve our agriculture. We import so much food in this country, but we are not securing our future of getting better food, like investing in Israel. You've seen the crop technology that Israel does today. We are staying on our conventional way of producing food. Are we going to eat grass in the future? Are we going to continue to import so much foods and manufacturing sector? Where is manufacturing sector in this budget? Have we put incentives for the local manufacturers? No. I agree with you, Mr. Dina, when you say that this country is dirty and it has a correlation with our tourist sector. You see everywhere it's dirty. And this budget has not tackled the ecological side, the climatic change, and the environmental side. So many plastics, nothing in the budget. We are not foresighted. This budget is not a budget for the future. We talk a lot, it's lack of levée d'annonce, But in practice, who is going to practice it? Who is going to enable these measures? You go in the municipality, the people are not working. We have people, they want to work, they want a job. I need a job, I'm unemployed. But when they are there, they don't want to work. I think we should appoint discipline masters to get people to work. Thank you very much.
I agree with you on the question of agriculture. We must have an agricultural sector. We know the problems of sugar, but cane, can we do other things with cane, including energy, and also, of course, crops, niche crops for exports, like fishing. Are we financing fishing and new boats with all the requirements? Giving skills to fishermen. All these question of our food is terribly important. One, to feed ourselves and our tourists, but also for exports. I agree with you, this is a sector which we must not abandon. It would be terrible to abandon it. It would be a big mistake.
Dirtiness of the country. There is going to be a campaign where everybody will have to come together and make sure that we clean up. And I think that was mentioned.
On agriculture, there is also tea. There will be some sort of rebranding of tea. Looks as if we are going to have some bio tea, whatever it means. That there was a mention, at least fortunately there has been a mention. Of course, this is not easy to find markets, except if the Chinese come and buy all our teas.
Good evening to the board, to the panel. Maybe I'm missing something about personally. It's concerning the Metro Express, which is the baby of this government. Will be a result to when I think there will be a general election or what. Is there anything mentioned in detail about Metro Express? Because the Prime Minister just mentioned it, by the way, will be completed by September 2019. So nothing was mentioned in detail. Right?
That was last year's budget, wasn't it?
I don't think there was anything, just like you said, it was by the way, you just mentioned, there was nothing sort of, it didn't dwell too much on the Metro Express. I don't know whether expectedly they won't be on time because September is the due date, although there's 2,000 people which is supposed to be coming to sort of give a helping hand. Additional, yes. And you have to see the state of Van der West Street, where myself and Pierre lives. It is pathetic.
Anyone else?
Thank you, members. Thank you, panel, so for your detailed analysis of the budget. I'm from Afri Jabin. Just wanted to have some clarification with regards to the levy. So there's no mention of the special levy cap in the budget, and also the date of application of the special levy is not mentioned. So I just wanted to know whether there is something like this in your analysis there. And third question is operating income different from leviable income? I just wanted to know, maybe Mr. Gauria could help us there. Thank you.
Yes, the budget does mention in terms of the taxability of banks. So the rate moves from 4% to 4.5%, if I recall well. So it is still sort of a disguised way of sort of using VAT as well as the income tax provision to sort of gather as much income in terms of the taxability of banks. So it is just a mechanism that has to be applied in terms of looking at your chargeable income. So they have not really, so last year's budget was full of it, but this year they have just mentioned that they're 4.5%. But of course we can have a chat after the meeting.
Hello. Dear panelists, just one little clarification on the issue of tax holiday applicable to SIC. Don't you feel it's a bit dodgy? Why we are making the law retrospective for SIC as from 14th of December? I was wondering that probably it was 25th of December 17 as a Christmas gift, but 14th of December to 2015. Are we expecting something like a midpoint saga in the future?
So no, this is my sort of big guess why 14th of December. I don't know whether it is Laila's birthday, but it is just a date that has been mentioned, and I don't know where it comes from.
Yeah, I can just clarify. I'm Shweta from the SIC group. And it's not SIC, it is SIC Development Company, just a subsidiary recently created. Nothing, it's not about the full group which is going to benefit, it's only for that. Thank you.
Anyone else?
Hi everybody. I'd just like to know whether you think that the provisions contained in this budget would be enough to help the country through the economic difficulties experienced by the world and our major partners like Brexit and the trade wars and all that you specified here. Do you think that there are enough measures to help the country through on that?
We would have liked to see more measures for that specifically. We don't feel there are enough. We don't feel that those problems have been tackled as they should have, and therefore we feel that there's much more to be done. Maybe because it's the last budget of this government as well, and the new government will obviously have to come in and really prendre les taureaux par les cornes and address those issues.
In other words, the economic worries have been crowded out by the political requirements.
Of security, Pierre, you mentioned that this drop of confidence by tourism to come to Mauritius. One of the issues that they've been expressing is security in Mauritius, not only for foreigners, for Mauritians as well.
I suppose if you had asked this to a minister, he would have told you that's why we have now all these cameras. Let's hope it works.
Good evening, members of the panel. I'm just slightly confused with the measures announced with regards to the sugarcane industry. Because on the one hand, we're saying we want sugarcane planters to come back and we'll be giving them 25,000 rupees per ton. But then we know what is happening with the sugar protocol, and we know that the sugar industry is slowing down. So where's the balancing act of this? how would we encourage sugarcane planters to come back? That's my question. Thank you.
I think in terms of the sugar, I'm not a big expert in terms of the sugar industry, but what was mentioned is they will compensate the small planters up to 60 tons with the 25,000 rupees per ton of sugar to be produced. So indeed, it is a worrying side of things. You just have to see how many sugarcane fields are left abandoned these days because it's not viable. So I think the government has to come out with certain measures to incite people either to convert into tea. At least we can export to the Chinese. So we'll have to see how it goes.
Measure as well. It's only in respect of this year's crop. So it's not going to happen again and again. So as I said, maybe we need to wait for the World Bank study. The World Bank study is meant to tell us how to sustain the sugarcane industry in the medium to long term. It may very well say that it's not sustainable. But no indication was given at this stage, so we just have to rely on the study. And studies can take a long time. So let's hope it comes out very quickly.
Just from an anecdotal point of view, I was traveling 3 weeks ago and I happened to be in a place in Romania and I was served Mauritian sugar with my coffee. So have we explored enough our possibilities of having so-called special sugars? That's a question.